When you're looking at supporting evidence, within a opportunity for gaps, in this particular case, I'm looking at a gap up situation. The amount of evidence that you find is important, and oftentimes a mixed amount can be very effective. And by that I mean maybe you have the power four lines, you have three going in one direction and one going in another pattern, or you have just some other things that are reflected as supporting evidence within other charts. And so just the combination of information on those other charts is oftentimes significant. And we can overlook that when we see it. Especially, I think you may have heard me say before that probably around 75, 80, maybe even 85% of all down touches that occur and up touches that occur do so in the trend chart. And so you have down touches in other charts, but subcharts, but you don't have the volume that you have in the trend chart. And so when we look at factors contributing evidence or supporting evidence, or just things that suggest to us that the price will move in the direction anticipated, that can become very important for us. In looking at this example, I'm looking on May 24th, 2017, and it's AERI, and we have a strong gap up, and in this particular case it closes at $40.50 and it opens at $56.80. So it's a monster gap up overnight, and we have some significant information that we can see as a result of that. The first thing I'll talk about is our trend red down touch under zero. It's following the basic formula that we always talk about. If you look at the white line that I've got set up the day before, the trend red is up there near just above trend pink. So it looks like it could be a down touch trend pink, which is an interesting aspect, and we'll look at that in a little bit. But I just wanted to point that out, that it was above zero. And so the standard down touch, trend red down touch under zero, crosses under zero that day, and then the following day it goes up, gaps up, or significantly reverses. And so you have that down touch. This also is one of the most powerful down touches in the trend red arsenal, or whatever term you want to call it. And I think it's because it goes down so far, it just pushes down so far that it has to push back the next day. And so that's what we see. You can have trend red go down a second day with trend green crossing that day under it, and then it'll reverse back up as well. But the signal, the formula for the trend red down touch under zero is the cross under zero that day, and then the following day it reverses back up again. Because you can down touch the blue, pink, or yellow line, you can down touch the zero, and the fifth area that you can down touch is under zero. and all three, the gray, green, and trend red, can all down touch under 0. We call that a triple down touch under 0. But like in this case here, we've got a double down touch because trend green has down touched pink and trend red is under 0. And trend gray is obviously things are moving up because trend gray is divergent with red and it's going up rather than in a normal down touch configuration above blue. So you know that this is a little bit stronger anticipated move up simply because gray went in the opposite direction. When we go down to the power chart, we see that the power all 6 of them are above the orange line. So that qualifies, as far as the location is concerned, when all 6 are above the orange, that qualifies it from a pattern group location perspective to be a gap up. That doesn't necessarily mean it is going to be a gap up, because you do need the patterns that go along with it. You do need the conditions that go along with it, to the signals that will tell us that we have a gap up. Now, back to this one here. If, for example, you saw this one the day before the pink vertical line, that pink vertical line would tell you, excuse me, the day before the pink vertical line would indicate to you that, hey, this is a gap up situation. It's down touching the pink. The green and the gray are all also down touching up above, but they're significantly higher than the blue. So I would count the gray when it's way high, but not necessarily the green if it's above 5 points. In this case, trend green is at 12 and trend blue is at 6. So it's 1 point away. That's not bad. It could technically be qualified as a down touch. But your typical patterns that you would see in the power chart do not exist on this day, on the day before the pink vertical line. The other, I've got a green vertical line on the same thing. I think what I'll do, I just forgot to do that, I'll change it to pink, and we'll talk about what's happening over here. It's always good to keep things in perspective when you're thinking about indicator relationships. Zip Green and Zip Zion track trades going in and out of the stock. The higher that they go, the more trades are taking place. Zip Zion is the grandfather to Zip Green, and it takes a lot of power to keep Zip Zion at 100 or to keep Zip Zion at 0. Needs to be a lot of activity either coming in or going out of the stock. Zip Pink is your price barometer along with Zip Zion or Swing Zion and the 3 price lines, green, red, and blue. We have Zip Pink lowest and Zip Green highest. And so that tells you what? That tells you that people are going into the stock, they see something potential, or they potentially see something, they're buying into the stock, but the price is at its lowest position relative to the other indicator lines because Zip Pink is lowest. And so we have a low price, but people are buying the stock. That's a classic. You need to get into this trade because somebody else has seen something that we may have missed or whatever, and hopefully you can pick this up on a 1 hour before the closing bell, and it's easy to pick up. You could pick it up from your down touch under 0 and your green down touch pink. Those are 2 areas where it would definitely pick it up. And then, of course, in this particular case, we have swing yellow down touching 0, swing Zion, which again is your price barometer, it down touches the green line, and swing pink has been on top of the red line now for the second day. And when it travels along the top of or right next to one of the heavy lines, one of the 7 short-term trend lines, that's a strong indication for a strong movement up. Excuse me. If you go to price red and green, price green is at 63, price red is at 38. These are really low for a gap up. You don't see this very often, but you do have conditions that will dictate a low price. And by that I mean you have 3 down days coming up to this. Many of your indicators are going down, but you have some divergence as well. Your swing gray is under 0, but it's constantly going up. And that doesn't necessarily mean a whole lot because it is reasonably low, but it is an interesting aspect to the situation because it is in an upward momentum, if you will. Excuse me. And the price has actually been, this is the 5th day that the price has gone down, and that swing gray is going up. So there's a lot of down touches in this. Power red is down touching 0. Power yellow is down touching orange. On this, let's say you bought the day before. It closed at $40.80. The next day, this closed at $40.50. And so even if you made a decision at the last minute on the day before here that this was a viable thing and you thought you had the pattern shape selection in here, then you would have bought that thing and you would have been down 30 cents. And that's nothing in a $40 stock. And then especially when you see what happens on the pink vertical line day. One of the things that sticks out for me is that you have opposites occurring. Now it's more how do I say, it's not kind of like divergence. It's a little bit different than that, and that is in the power blue and the power Zion lines. You have a BOC in the power blue and a TOC in the power Zion lines. That appears to be a type of divergence, but it's also seems to be something that's not quite normal. And with that in mind, that can lead to a gap, but or next day strong movement, but you just don't know what's going to happen for sure based on what you see. The thing that I'll share with you here is that you have a lot of differences in what's going on. One thing I'll point out here is that power red is at 159 on that day and 159 on the day before. And so 2 and 3 days before the gap, you have power red equal. And if, again, you've heard me tell you about certain things being equal, is it this happens to be a 3-day or at least a 2-day difference in the before the gap occurs. Power white is also equal on this day. And so there's a couple of of now this is a few days. This is 2 and 3 days before the pink vertical line, and that appears to be the same thing with the price chart. Price green is 88.51 and 88.51. So you have several lines that the price has, or that the lines have been equal. Power red with the price lines is significant, and if we checked a few others, we might find the same thing. Zip yellow is at 42.06, and zip yellow is at 42. Zip yellow is even. So we've got, and it looks like pink and swing pink and swing Zion are also even. So you might have 6 or 8 even indicators, equal indicators here. But the point I wanted to make is that it normally, when you have equal, it normally occurs the next day or the day after. But in this case, it's happening 2 days. The gap, the buy day is 2 days after the equal conditions that occurred in many of the indicators. So it's kind of like a delayed response that occurs. And I don't know, I know the correlation is there, I know the reaction is there, I'm just not certain about its total, how do I want to say, its total effectiveness. We still got to look at what's happening and pick up the signals. But one of the key things that as you back up through the days before this vertical pink line, you try to find a day when, hey, maybe there's a signal in there. And obviously the day before with trend red on a down touch pink is good. But we had the different pattern problems with the power 4 lines, and so that created a problem in that it was not likely to be a gap situation, and that carried us back through. We didn't really find anything until we get back here. If I'm going to take and put a vertical line on this, and that green line there represents a good opportunity. And by that, what I'm trying to tell you is that you have a trend red down touch under blue, you have a trend green down touching the blue line, and you have trend gray down touching the 0 line. So there's a triple down touch on all on solid indicator lines, and you have all 6 of the power lines crossed under the orange line. So all 6 of them are under it. So that's a classic. I haven't counted totally counted the indicators, but it looks like there's a lot of TOC patterns on this day. And it looks like a few 3-day down patterns. So without counting them, I think everything is there. And this would then be a reaction for a gap up possibly. But in this case here, on this, we have a nice green candle, and that has a low of 38.40 and a high of 41.92. So that's looks like it's gapping, or it looks like it goes up the next day a total of a little over $3 and about $3.50 or 60 cents that it moved up, and that's really good. Anytime you can find a stock that moves $3.50, you should be able to make some significant gains with it. And again, it all fell within a trend red down touch under the blue line, and of course the other 2 lines down touched as well, and then the power lines all went down under the orange line. And so we've got what we identified in how we saw things. Looking over here, we see price red is almost down touching the blue line. I think it looks like it's about 7 points away. I thought maybe it was closer than that. You also have zip yellow lowest. That's going way down. And then swing Zion gets lowest. It's even underneath the swing gray line in a strong down push. That day was fairly strong by most standards. The gray, red, zip red went from 51 down to 3. So that dropped, almost 50 points on that day. That would be the day before that green candle here. So you can see that when you get a majority of what looks like a gap up, that you can have a real nice candle the next day. Because anytime you can pick up $3 in a movement, that's pretty significant. And like I say, it oftentimes has to do when trend red crosses under 0, or like in this example here where the green line is, trend red crossed under the blue. And it crossed under the blue, but it also crossed under the 0 line as well on this day. So I missed that before. So very significant information on how we can identify with gaps. Also, you've got the divergence on the pink vertical line with this big gap. Excuse me. The divergence is the trend trio is above 0, and the other two groups are both under 0. So trend trio has been up above 0 for 3 days. So that's fairly significant as well in a divergent relationship to the situation. So a great example of what's going on in that particular gap. Excuse me. And we also looked at several days before the gap, trying to find a signal that would tell us that we had a gap, but the pattern shapes were not there, and the basically, except for the very day before, we didn't have any down touches in the trend chart. So that does make a significant difference, as we've said from the beginning. You've got to have a down touch in the trend chart to make everything work. And obviously you have to have the patterns in the proximity 4 group. So excellent example of how gaps work, how you can see them before they gap, and we go from there. It's pretty amazing. I continue to say that, but I'm thrilled at what we can share. I'm excited about how we can see things that other indicators don't show us. We're truly amazed.